Most people make faces like this if you talk to them about pensions. But it's actually one of the most important financial decisions you could make in your life. It could be the difference between you retiring like this or like this. For Muslims in the UK, this is particularly important because about 30% of people in the UK that are Muslim don't even have a pension. And about half of those who do hold their money in non-sharia compliant funds. In this video, we'll explain what a pension actually is. We'll explain what types of pension there are out there. We'll explain if a pension is actually halal or not. And finally, really practically, who are the big pension providers out there that you could potentially consider to invest in. As this is a video about pensions, one of our partners, Pensionbee, has kindly agreed to sponsor this video. We'll talk a little bit about them later on. If you're new to this channel, Islamic Finance Guru, or IFG for short, is a halal investment and personal finance platform. We help you compare, analyze, and review the latest and greatest products that come out of the Islamic finance world. Our mission is really simple. We want to help Muslims everywhere get wealthier and put their money to work. If that sounds like it's up your street, then please do like this video, please subscribe to the channel, and please do feel free to share this video with your friends and your family. And if you'd like to chat with me and thousands of like-minded others, then please do check out our Telegram links below and join the community. First and foremost, a pension allows you to save for a comfortable retirement. If you just leave it to the state pension, then you're just going to get £179 a week. And you might not even get that if you haven't contributed enough during your lifetime to national insurance. And I don't know about you, but living off £775 a month is not that much. A pension supplements that and allows you to have a good standard of living when you're older.
Your employer is legally required to contribute at least 3% of your qualifying salary into your workplace pension, as long as you are also contributing. So if you don't have a pension, they basically avoid having to pay you that 3%. Don't give them that benefit if you can avoid it. The government is very keen for you to have a pension because they know that otherwise they'll have to pick up the tab. So there's no guarantee that things like the state pension will exist when we come to retire. So to incentivize you paying into your pension, they give you something called pension tax relief at source, which means they will basically pay into your pension pot the tax they would charge you otherwise on that money.
Let's say you're a basic taxpayer. On 100 quid of income, you're going to have to pay 20 quid tax. That means you actually go home with £80. Now, if you put that £80 into a pension, the government will top up your pension, if you're eligible, with £20 on top of that. In other words, to round it all off, if you've got 100 quid you put in a pension, the government will top it up with 25 quid. That's 25% that you've got profit on immediately straight out the gate. Great investment. If you don't sort out your pension, then not only you suffer, but also the community as a whole suffers, because we are stewards of our wealth and we pass that on after we pass away, right? And if you haven't looked after your wealth, then the community as a whole will lose billions of pounds over the next generation. And if we genuinely want a vibrant, prosperous Muslim community, then we need to make sure we do our bit to look after the economic aspect of that by looking after our money in the way that is proper. The way a workplace pension works is really quite simple. You contribute up to 5%, let's say, of your income per month into your pension pot, and your employer is legally required to contribute at least 3% to that, so that overall you end up with 8% of your income going into pension every single month. One important rule that you must remember about pensions is you can't touch them until retirement age. That's currently 55 and it will go up to 57 by 2028. However, importantly, when you do retire, you can take out 25% as a lump sum tax-free immediately, but the 75% that's remaining, you can take that out as well, but you will be taxed at your normal tax rate if you do that. So most people often, they will just leave that in and they will use that as their income. Pensions come in two main flavors: defined benefit pensions and defined contribution pensions. Defined benefit pensions are also called final salary pension schemes. They give you a multiple of your final salary as your pension, Islamically, they are seen as part of your salary as opposed to an investment, and you will typically have these kind of pensions if you work in the public sector. Defined contribution pensions, on the other hand, are pensions where your money is invested into a pot and that then churns away and makes profit, and you get back for your pension whatever the returns have become over the few decades that you've been saving into your pension.
So a SIP it stands for self-invested personal pension, and it's a form of defined contribution pension that sits outside of your automatic payment into your workplace pension, otherwise known as auto-enrollment. And you can set these up yourself, and they allow you a bit more control around your investments and your retirement planning and your pension.
SIPs are particularly useful for self-employed people because it allows them to get a pension, but also for people who are employed but would just like to have a supplemental pension that they control directly, because then they don't have to rely on any fund managers and they decide what investments that they're going to put their money into. There is actually one big downside of SIPs as well, and that is that employers don't have to legally agree to contribute to one. So that's something to watch out for. Okay, so now we know what the main types of pension actually are, but as a Muslim, the key question is, are they halal or not? Well, it depends on the type of pension it is and where it is actually invested. Defined benefit pensions are seen as perfectly permissible because they're nothing to do with where you're investing that money. Islamically, they're seen as part of your employment contract, and it's a deferred portion of that you ultimately get when you retire. So just like it's permissible for you to take an income, it's permissible for you to take that pension as well. Defined contribution pensions, on the other hand, are only permissible if the underlying investments within which your pension is held is permissible. The way you find out if your defined contribution pension is being held in Islamic funds is by looking at your last pension statement, logging online if they've got an online portal, or asking your HR people about your pension. SIPs are much like defined contribution pensions. They are only halal if the stuff that you're investing in is also halal. There are now a number of Islamic pension options available for you in the UK, and they come in two main big categories. There's your workplace pensions, the ones that you have with your employer, and then there's the private pension options that you have supplementing your workplace pension outside of your work. For workplace pensions, just check your pension provider and see if your money is being invested in an Islamic fund. Most providers these days do have at least one Islamic fund available, so make sure your money is being invested into that. If they don't have an Islamic fund available, you should ask for one to be added. And if they don't agree to that, then you should ask them to actually switch their entire pension provider to one that does have an Islamic fund available. Options Pensions is an example of a pension provider that does have Islamic funds available. For private pensions, you have three main players to consider. Pensionbee is a UK-based online pension provider. They aim to make pensions more accessible and straightforward for existing pension holders through their online, easy-to-use interface. They are relatively new, they only established in 2014, but they have got over 400,000 customers now and manage over £1.5 billion in investment. They are FCA registered, and their pension plans are protected by the FSCS up to 100%. Pensionbee is a great way of combining all of those existing pension pots you might have through various previous employments into one place. And that's really helpful because that way you don't lose track of these pensions, because you definitely don't want to lose them. And Pensionbee has a pretty clear, transparent fee structure. For the Islamic option, it charges 0.95% per annum up to £100,000 invested, and over that, it halves that amount going forward. Although Pensionbee do specialize in consolidating all of these pensions together, they've actually brought out a new offering for self-employed people as well, who may not necessarily have pre-existing pension pots. For them, they say that you can come online and you can use Pensionbee to actually start your pension pot, and there is no minimum contribution amount required for these pension plans. They do have a sharia-compliant option available, and it is fully invested in the HSBC Islamic Global Equity Index. The fund is 100% equity based, so it's relatively concentrated into equity, but it has had a pretty decent performance over the last 5 years of 19% annualized. However, it needs to be said that past performance is of course not an indication of future performance, and you could get back less money than you put in as well. The fund is halal and is independently checked regularly by their Sharia Scholars Board, and any haram income is purified out as well. Pensionbee has a pretty good Trustpilot rating as well, with over 4,000 reviews on there and a 4.7 rating out of 5. Pretty decent. Wahid Invest also offer a SIP through their partnership with Options Pensions, which is a UK registered regulated entity that offers pension plans. The SIP is then invested into Wahid Invest's portfolios, which come in different flavors from very conservative to very aggressive. And Wahid Invest charges its fees on that of 0.99% up to 250,000. And if you invest more than that, then it's 0.49% after that. There are also the underlying fees that are charged as well, which are between 0.63 and 0.93%. Simply Ethical also provides SIPs via its partnership with Hartley's Pensions, which is again a UK regulated pension provider. The minimum investment to open an account is £5,000 or £3,000 if you're going to contribute per month £100. You can also transfer over your existing pension pots into the Simply Ethical SIP as well. So there we have it, folks. That was a whistle-stop tour through the world of pensions. If you do have any questions or suggestions about future videos, we'd love to hear from you in the comment section below. And once again, thank you to our sponsor Pensionbee for all their help on this video. Until next time, Assalamu alaikum.